All right, so I just want to lay out the trade, um, just so you can see. This is the daily chart, the 240-minute chart. We can the open was it came up here, but I'll show you the 60-minute chart. Um, it's like wow, where is it headed from here upwards? Um, and I just want to show you what I plotted as zones. And as obviously you can tell right now where my zone was. Remember the 8:30 open is this green candle. This is the 8:45 candle on a 15-minute chart. So basically it goes up, it breaks this high. I'm like, wow, I knew this high was gonna break because this is a crap pivot, didn't come from very well. And then it just kept on going. I'm like, well, this as a holding level, I holding levels are my thing. And when I see green in a red holding level, such as these green bars, um, it doesn't work. And the reason I know it doesn't work because I drill down to the 5-minute chart and notice that this first uprising is not a holding level. It's more like a lonely pivot, as you can see here. See how it's not side by side with with the leg out here with the leg down. It's not side by side. So you'd put your stop here, but still it's not a level that I would be interested in. And honestly, I think it would fail. It doesn't work. It won't work. But after it breaks this, in which it did, okay, I was thinking, wow, this thing is in price discovery mode. If it breaks that, not only is this candle over 2 standard deviations, but this thing needs to break. So where's it going to go? It's going to go to fresh supply. And this is fresh supply. And it lines up with the 60-minute split here. If you can track the 60-minute split, here is the distal line to the 60-minute split. And this is the initial line. This is the break. But yeah, it's inside the 60-minute split. Back to the 15-minute chart. I'm like, wow, this is a fantastic level. Um, and all I have to do is plot what I would do. Um, and basically, I take it from the stop all the way to here. Okay, because this is the leg in, and it stops there. You could have it at this distal line, this point right here, but I don't think I would. I would just have it as the distal line, much like the 60-minute distal line. Anyways, I'd drop it down to the 5 minutes, see where my stops are. This is the 60-minute stop, which means this would be the front side of the zone, and then this is the back side of the zone, which I would still hold my position through, but just knowing that it has broken the 60-minute. It has in fact broken the 60-minute split. So if you look on the 60-minute split, you can notice that the distal line of this split has been broken on the 60-minute, and that would be into the red zone, that therefore the back side of the zone. Usually front side is a good sign of a higher time frame trend, meaning if it works on the front side, um, there's more profit potential in my opinion. The back side is just going to be small profit. Either way is fine. Either way you can make money, but I'm just saying if I took the full entire zone, it's a different story. Anyways, this thing was ripping down, so I just thought I should show it and show that if you want to exit manually without any without any target, so you enter in, so you're entering in the front side now, and I would monitor it on a smaller time frame than the MTF, the minimum candle time frame for holding level, which would be the 15-minute, because it's the minimum time frame you can get. Um, no, maximum time frame you can get without it becoming a split. The 60-minute is a split. The 15-minute is not a split. See, it's not. It's a holding level, a series of candles, not just two. So that's what I'm interested in. That the 15 minutes, the MTF, but anything under the MTF would be reasonable to go long on, or sorry, to exit our short position on once in the position. So it comes down and it forms a green bar. If there forms another green bar after this green bar and breaks this green bar's high, we'd exit right here. But in this case, there was nothing there. There's no bubbling action going upwards at all. And until then, we're not going to exit our trade. And we monitor the 3-minute for this, and we also monitor the 5-minute for this. Usually it happens in the 3-minute first because you get more bars. You start seeing reversals sooner on smaller time frames, of course. So that's the trade. That's the walkthrough. It was a fantastic short. I mean, this is unbelievable. Going back to the 240-minute chart. Um, what's my reason? I don't know. I mean, I look on the weekly chart. You see that it's dropped here. It's Thursday. It's coming back upwards. It's on its way up. But also, if you see on the monthly chart, it's 225. There's like a week left of, not even a week. It's actually, there's 2 days left of this month, and it's a very strong, it's a strong pivot in the down direction. And I think it can come to here this month. But as you can see on the calendar, it's the 25th today. Tomorrow is the 26th, and then the 28th is Sunday. So the actual month would end actually today or tomorrow. So it would have to set up for a weekly if this wants to get to this demand. Um, the weekly would have to push lower. I don't think that this weekly low will be. Um, it could be challenged, but I don't think it's going to break. I think this is the established weekly low. It's late in the week, it's Thursday. There's no way that this weekly low will break. And if we want to plot that on the chart, we can see that on the daily, this is the weekly low. It's coming from demand, not demand that I would take because it's quite used already. I like taking fresh stuff underneath. But anyways, if it wants to go upwards, it can definitely beat this green line. In fact, actually I plotted this green line in this morning. This morning I plotted this line on the daily. I didn't know if it broke or not. And in fact, I don't think it did. Yeah, it didn't. So it did not create a new daily high at my demand zone, or at my supply zone, sorry. It did not create a new daily high, so it didn't break out upwards into my demand, because that would be a 2-bar bubbling upwards, because this current bar would be showing green, you know what I mean? But that's not the case. It did not happen. In fact, my supply zone is here. It's right here. The distal line to my supply zone is, oh, it was already shown. It's these lines. The distal line is right there for my supply zone. So it got there and then it crushed downwards. Um, Headed down to the 240-minute chart so you can see a little bit more. The 240-minute, it came up here. These are my zones. Obviously it broke the 60-minute pivot. No, it didn't break the 60-minute pivot, but the 240-minute was in price discovery. It and whenever I see a bull fib, or sorry, a bear fib, and then the next bar is just green here, and like it has no supply, I have to look underneath. I have to look at a smaller time frame and see if there's anything that I can grab. And yes, it grabbed this. I wasn't expecting a giant move like this, but I was expecting a small retracement at the very least, because this zone is fantastic on the 15-minute. The look, it's protecting free space. It's outside the range. This is the range right now. That's the range. And it actually booked outside of the range. So um, that's a fresh zone on the outside of the range, protecting free space. The distal line is closest to the leg in. These are all signs of a good supply holding level. It's a very good holding level. Now, as far as how far it would go, in my opinion, this strategy absolutely needs it absolutely needs uh, the ability to hold runners for as long as this goes. Um, but I'm just trying to decipher um, what is the best method of doing this. Like, if I have 3 entries, if I say I don't know, like I want to capture a small move and then be risk free so I can just hold this thing until it starts bubbling against me on the smaller time frames, which is green bar, break the high of that green bar and the next bar. You know what I mean? That's the bubbling against me. Um, or if it forms a holding level, which it kind of did here, this would kind of be my stop, but I'm only taking green on green now. As far as break even goes, if I have 2 contracts and I get rid of one of them at 1 to 1, um, so at 1 to 1 I get rid of 1 contract. It looks good. Then I would have to bring it to break even, or at least the pivot, and it would be a break even trade if it comes back and hits me out. This is not a bad strategy, in my opinion. It's not a bad strategy where I just take half off at 1 to 1, whatever half may be. Um, there's issues, and sorry, and then I bubble, I trail that one, the leftover contract all the way down. So in this case, it would drop all the way down, and we'd still be net short just one. If I raise that, say I raise that to well, I don't want to move my stop to break even. I don't know. I just don't like moving my stop to break even because then I take the trade and it's completely altered the trade now. Now my risk is here when it obviously should be in this pivot. What if this pivot was moved upwards here? You know what I mean? Well, I entered in here. I came into a half drawdown and came back down. Where do I put my stop now? Well, the stop should be placed. The stop should be placed on the pivot, above the pivot. But instead, you have the placed where your break even point is. And the chart is not based on your. Um, the chart doesn't care where you entered the position. The chart only cares. Oh, sorry. Go to the 3 minute. The chart only cares about what the chart says. Boom, I exit. Exit the position right here. Exited, and we are net zero now. Net zero now. Just because this green bar formed a high, and then this next green bar broke this high, and then therefore it's broken. In this case, if this current green bar did not break this high, then I would not be into the trade. I would not exit. If this green bar printed, formed a high, and then there was a red bar formed, or yeah, another bar formed without breaking the high, and then the next bar breaks the high, I still would not exit. It has to be current candle, and this happens all the time. Trust me. The 5 minute or 3 minute, it happens all the time where the very next candle breaks the green bar's high. So it happens all the time. You're gonna exit your position pretty somewhat soon. So anyways, back to the point of what am I gonna do with my risk here? I don't know how I'm gonna set up this trade. I know that price turns here. Okay, we know that price turns here. Um, but I don't exactly know how I'm going to set up the risk reward. It's gonna be it has been an issue. I'm trying to back test it because honestly just looking at data is a little bit easier. Just find the data of the probability of it going 1 to 1. Out of all my trades I do, I mean they usually go 1 to 1 or they usually go whatever, right? But if you do a 1 to 1 and get rid of most of your profit at 1 to 1 and then just keep a little bit for a runner, you're gonna you're basically trading a 1 to 1 strategy and then just with a little fluff on the end. We want a serious strategy. If you want a 3 to 1 risk reward relationship, this is different. This is something you can handle. But that means you have to be okay with it going all the way 1.5 to 1 or 2 to 1 and then turning against you and breaking the entire trade. That means you have so much profit on the table and you did not take it, which is not okay. And it's crazy. So it's tough. It's really, really tough. In my opinion, I think I'm gonna have to go um, with the three contracts, 1 to 0.33. So basically, it's not 1 to 1.5, but it's not 1 to 1 risk reward relationship. And this is mathematically a situation where I am net short, net short four, four contracts, and I actually get rid of 3 of them, plus 3 here. I get rid of 3 of them, and then I exit my other position over here. See? So basically, how this works is how much money does the 3 contracts do? How much money can the 3 contracts make to take the risk of this as one contract? So basically, there's 100, say it's 100, let's round it down to 100, okay? 100 tick risk, and this is a $5 market, so so 100, oops, 100 times $5 times times one contract, which is $500 per one contract. Okay, super quick. $500 one contract. And then 4 contracts, it's obviously 2,000. So times 4 is $2,000. But I just want to take the risk of $500. I just need $500 and then I can just hold one contract. Okay. So how we do this is we just take how much time, how many ticks does it take 3 contracts to get to $500? You just do $500 divided by oops, I can't do parentheses in this thing. 130. So 3 times how many dollars per tick is 3 contracts? It's just 3 contracts times $5. $15 a tick. So 500 divided by 15 is equal to 33 ticks it has to move. So 33 ticks, that means, my mistake, 33. That's how much it has to go. That's how much it has to go to break even. Okay. My risk is huge. My reward is very small to break even, and then I can hold this thing. Hold this thing to let it roar. And in the end, eventually, actually get, if we actually look at it, so 33 times $15 is $495. So basically, yeah, plus 500, okay, plus, yeah, we can do this with this one. Plus $500, okay, at that 33 mark, 33% of the zone. I think that's a good average, honestly, because when I lose big time, but really, I don't lose huge. If I did 5 contracts, 5 to 1, then I can lower this to like 25% or 24% of the risk that I can take break even. I'm sure it moves the break even point closer, but in the end, my risk is huge compared to my reward. But in this case, our reward is $500 plus. Man, oh man, I don't even know how far away this is. From here to the entry point is 500, say. 500 bucks. So basically, we're looking at $500 times no, 500 ticks times one contract, $5, $2,500. Okay. I think it's pretty interesting. So this would be a $3,000 trade if we operated correctly, which I did take this. But I didn't. Well, I didn't. I'm not actually trading right now. I just took one micro on the way out of it as a confirmation entry. But that's another tangent. Okay. Basically, that's the thing. That's the case. If you can see it right here, we actually break even at 33% of our risk, and it works great. Now, if we did this as a mechanical one-to-one, I don't like that. I think a mechanical 33% of the risk is fine with me. Um, it would be a small bump, and I get risk-free on the trade. Now I can hold my contract. I don't have to move my stop, and then it keeps on rolling. Now, if it goes, say, one-to-one, or one-to-two, there's really no point in having my stop up here anymore because it's already rolled past me, and I don't think it should retrace into my level again. And if it does, yes, there's a ability to go at it, but in my opinion, that won't even matter anyways because try doing that without a bubbling action on the smaller time frames. I'd be out of the trade anyways, okay? Because my break-even point is 33% of the risk. Now, you have to have 4 contracts in this operation. The only problem is, actually, it's not a problem because if this zone is bigger or something, you can't have it hold another whole 5 or 4 contracts. If it's bigger, you can take 3 and then have 1. Either way, trade the micros, and then you can really scale it to your reward is exactly 33% of your risk. It's that simple. And then the contracts are all lined up. I can do that. I do that right here. I can do that right here. My risk is 100. Um, my target is at 18, and then this is at a 15%. This is at a 15. This is at a 15. Like where is it? Sorry, 0.15. Yeah, it's at a 15, which is ridiculous. It's completely insane, but um, I think it's too much actually. 15% is way too little because if you lose big time. If you lose big. But it's a complete trick. It's a complete trick. This is the whole thing is a freaking trick play, man. It's a trick. It's like I'm trying to get break even as soon as possible and let this puppy ride, and and it did. It did. Obviously, I wouldn't be in anymore because it totally bubbled on the 3 minute right here, right here. Yep, that initial one I would exit, and that's what this strategy helps is when it starts going against us, we get out. Okay, but we're not going to catch deep trends because there's going to be bumps. We're not going to catch these deep trends. Like, we're not going to catch like this trend all the way down and perhaps to this weekly low. We're not going to catch those trick crazy moves, but we will catch fresh demand to fresh supply. Um, fresh supply, where's the fresh demand? Probably here. I'm looking. Um, fresh demand, because this was the high, right? This was the high. Honestly, it looks horrible, but this is the start of the demand. I want to look underneath this line to see if there is something. Totally there is something. Um, I would put the start of the demand here if I was a buyer. But if I'm selling off my position, just like this, if I'm selling off my position, obviously I would want to exit nearer to this line. Okay, cyan. There we go. Oh, okay, and it did enter. So I'm seeing the chart now. It did enter or exit my zone, but it didn't enter my area of longing. But still, oh my gosh, awfully close. That's the fresh demand, and that's why it's bumping. It's trading from fresh supply up here, fresh supply to fresh demand underneath. And there's more room to go underneath to get the fresh demand. This demand is not eaten up whatsoever. Anyways, um, it's very interesting. It's very, very interesting. An added point I just want to show. Um, if you can see this, this is this is very interesting because which picture are we looking at right now? There's either an anticipation zone where this zone is okay, it's kind of established, but it's really not. It hasn't moved much in the market. Like it's very small. The leg out has not really legged out yet, and we want to get on this demand zone before it's even a demand zone in a way. This, on the other hand, is already an established demand zone. It's fresh on the outside of the range, side of this pivot, and it's fresh demand, and it's a good buying opportunity. But where do we put our targets? In my opinion, this anticipation zone on the left-hand side, the targets can be further away because I take the risk for this trade, even though it's not established. It could be more risky, but this thing can actually turn and break this high and um, continue an uptrend completely, an uptrend, higher high, higher low, higher high, and break that higher high. So I would target next opposing zone. Okay, but in this case, the next opposing zone, I mean, it's not on the other side of this high. It's actually right here, or it's right, um, yeah, it's right here because this on this pivot, around this pivot, this would be the next opposing zone. That's the high. That means it wouldn't break this high. It wouldn't break the high on this side. But there's no data to back my hypothesis here. It's just this is coming after an established zone, after an establishment. It's late. You haven't hit this. I'm trying to enter this at this stage right here. Enter it. It does not have to be necessarily a smaller time frame. It does not. I'm talking about the same time frames here. Okay. This this you could have had entry right here. This small pivot right there, and then just have your stop. Um, and I'll show you. Yeah, there's just a different way of doing things. There's just a difference because this what picture would this be? This 15-minute zone. Well, it's definitely more of the established. It's most definitely established because it's already been hitting and now it's already made a low, it's huge low, and it came back and retested it. But this has already been tested. Oh, sorry, this is this has already been established, you know? So it's much more like this side in this trade, but which is confusing me because because it broke that low. In this scenario, it's hanging out underneath that low, which in this picture we would buy here in this blue lines, and then we actually sell above this entire pivot, which is huge profits. Huge, because this move, breaking this small fake pivot, is because this pivot's probably not coming from anything special, and that's why we want to catch on this trend going up, breaking that pivot and releasing the uptrend. I mean, this is pretty good profit potential, but dude, the amount of risk or the amount of reward here versus just beating this little high is huge. It's absolutely huge. And that's what happened in this trade. Now, I don't know the probabilities of success with this trade. That's the hardest part. I'm just trying to figure out possibilities and probabilities. But to finish this off, where I actually entered was based on the 3 minute. And it actually, if you want to see, yeah, so this is a little easier to see. It went like this, and like, oh wow, this is a good little holding level now, protecting it from re-entering the supply zone, which is highlighted. So I took an entry right here. I took it from here up to here, right? That's my entry. and look what happened. It hit into my entry. I actually didn't have a stop loss because I'm clicking market order. But anyways, it ruined my stop by a tick or two, and then it dropped. So basically, what I'm looking at is it created a little holding level, and it came back, and I saw that this was green and this holding level. I'll take that on this risk because I'm looking at a higher time frame perspective, man. I'm looking at this thing's gonna roll downwards. Um, so I didn't care if I got stopped out in this scenario, which I don't think I would have. I would just put a little stop loss in here like this. But that's hindsight talking. Look how little it crossed that line. Come on. Come on. You gotta have your stop on the other side of that. So anyways, I would yeah, I caught this trend downwards, or I caught this 15-minute level. Okay, I caught it. That's a big move. Um, Caught the 60-minute split. But what am I really catching? I don't know. I don't know. I don't know on the daily. Anyways, that's the trade. It's actually entering into a 15-minute demand right now, so, or a 5-minute actually. 5-minute MTF here. See. I don't know. I'd love to stay on and see if it works, but I don't know if it'll actually hit it or not. This is definitely a different type of approach than this holding level. They're both established holding levels. They've both done their work and they're coming back to retest. I'm trying to catch this move before it even begins. I'm trying to catch this. It creates a distal line. It's coming up. It's coming up. It's coming here. Maybe I'll sell short within this split. And I'll just sell short and protecting this free space and let this thing roll downwards if it can. Which happened here, but then I would be, oh no, yeah. So I don't know if I would have actually entered in. I don't know if I would actually have gotten into that. And anyways, I need a higher time frame perspective of where I'm really headed towards targeting the next opposing zone, which is probably here. Here's good. Here's okay. But here's good. And it did. It bounced from there. Because this one's protecting free space as well. It's all about free space. All about free space. Okay, it's entering into the 5-minute zone right now. See the 5-minute here? It's protecting a little bit of free space, very small amount of free space. If you can see this, very, very small amount of free space. But the zone is right because the distal line, or distal line base is closest to the leg in. All green bases, and then the leg out is phenomenal. It's also lines up with a 15-minute split, and it is working at the moment. It's working at the moment. As far as I don't know how, I really don't know where I should put targets around here. But anyways, yeah, that's the case. So, just for fun, we're gonna wait and see this 5-minute bar, okay? I don't care how long this is. 34 minutes long? Shit. So, I have to take a screenshot of what's going on, so I don't know if that'll change something. I think the zone is good because, no, not good, but I think it's good because um, if it wants to protect this weekly low, if it wants to protect this week's pivot here, it has only certain zones as protection, and that is right here. I'll highlight right here, and then right here this open. I don't include this pivot because it's a crap pivot on a smaller time frame. I'll show you 60-minute, and then obviously it includes this pivot that it's in right now, this 60-minute split. Now this pivot sucks. It's looking for fresh demand, which is underneath the pivot, underneath the range. This I highlighted because on the higher, smaller time frame, I believe it is a zone. Doesn't look to be. It is a pivot, but I was looking on the 5-minute chart. Yeah, I was looking on the 3-minute chart now. I remember this. So 3-minute all the way down. We're looking. Yeah, this is the zone. Oops. Right here. That pivot and upwards. Anyways, zone's about to pop. To show you. Boom. I think it's gonna pop. Yeah, that's gonna pop. I don't know where it's gonna head because it's not looking good for the S&P 500, or it's not looking good for the Nasdaq right now. Okay, there's not much demand underneath. This trend line will be bought. I guarantee it. I don't know which time frame trend line, but that's the trend line. Probably gonna be some bounce. All right, that's it. Broke. Okay, broke. Oops. Yeah, it broke. Okay. Well, that is booming. Um, this 60-minute split is the low is 91. This low 89.25. So that's strange to me. That's strange that it would break that distal line. It should change inside this region. It shouldn't break the distal line, but it did. See? Ever so slightly, but it did. That's strange. Hmm. When thinking objectively, I don't like this zone because, well, I do like it because it's better than anything else we got going on. Okay, this is all right. But I like it because it's a holding level. It's going upwards. Um, but it needs to protect free space. It really does. I need to protect more free space than that. So, all right. See you later, boys.